Grateful you could stay on. Let's now settle for the details. Information reaching Joy Business indicates that the government has reached a deal with banks and insurance firms under the Domestic Debt Exchange Program. Now, there are also some changes made to invitation for exchange for individual bondholders as well as pensioners. My colleague Joy Biafe has more.
Joy Business understands that the said deal was closed on Saturday at a crunch meeting between government and some of these stakeholders. However, we're yet to get the fine details of the said deal that has been reached between government, the insurers, and the banks. When we got in touch with some of the banks, it was not clear about whether they fully accepted the terms proposed by government. This because we're told that, quote, we are working to get a good deal. Government has also proposed to pay 5% interest as coupon payment to individuals for this year, reversing the earlier 0%. Joy Business is learning that persons above 60 years and pensioners are going to be exempted with improved terms. It is not clear for now whether members of these associations and groupings really accept the deal, as their leaders are expected to start the necessary briefings this week. What would be the final response to government? Well, time would tell us in the agreements reached with these stakeholders and the impact on Ghana getting the board approval for its program with the IMF, possibly in March this year, so that disbursement coming in from April 2023.
So that's a story there, and it has to do with government reaching a deal with banks and insurance firms under the Domestic Debt Exchange Program. And there's been some changes made to invitation for exchange of individual bondholders as well as pensioners. And that was George Biafe bringing us that report. We will be speaking to an economist pretty soon on this developing story, and we will engage him on that. As and when we do have him, we shall bring him on to speak to us. But let's move on to some other stories we have for you. The Bank of Ghana, Cocoa Board, and commercial banks have agreed to allow banks to use Cocoa Board's deposits and placements at the various banks to pay retail customers who may not want a rollover of their cocoa bills. Well, this is coming after the Bank of Ghana directed banks not to pay customers their maturing cocoa bills investments following cash flow challenges facing Cocoa Board. There is more in this report.
In a statement, the central bank said it expects these short-term cash flow challenges facing Cocoa Board to be resolved soon to enable the cocoa regulator meet its obligations to investors. According to the banking regulator, Cocoa Board has assured that the outlook for the 2023 crop season is good and that cocoa purchasing is ahead of last year. On Thursday, January 19, 2023, a 6-month cocoa bill with a face value of 940.42 million cedis matured. The Bank of Ghana went through the usual processes to reissue on behalf of Cocoa Board a new 6-month cocoa bill to raise funds to cover the maturing obligation, but unfortunately the auction failed and was severely undersubscribed, resulting in a shortfall of 855.42 million cedis. However, at a meeting on Friday, January 20th, among the banks, Cocoa Board and the Bank of Ghana, it was agreed that all institutional investors will roll over their maturing cocoa bill. Financial institutions therefore agreed to roll over their cocoa bills investments.
Let's have a better appreciation of this developing story, and we have financial economist Professor Lord Mensah of the University of Ghana joining us via Zoom for more on this matter. Good afternoon, Professor Mensah, and welcome to the marketplace. Now, did the Bank of Ghana err in rolling over cocoa bills, you would say?
Yes, I mean, they did. There has been a statement that has been issued by the Bank of Ghana itself and clearly shows that, cocoa bills that were maturing within the 6 months of subscription has been, rolled over. Clearly, cocoa bills are institutional investors kind of package, which under normal circumstance does not need to be trickled down to individual, i.e., not to be a bond that is supposed to be retailed. But then some of these banks, find a way of, retailing it, selling it to individuals. And I'm not surprised the happenings that by force, rollover, Yes, whatever happens in one part of the financial space has a tendency of spilling over into another space. I've had few instances where, some colleagues ask me what will happen to the government, cocoa, bills. My response was that cocoa bills are contingent on cocoa inflows. And as a result of that, I don't expect anything to happen to, that space. But then looking at what happens, obviously, we're anticipating that if government should make any attempt to float, any bonds, in which is tied to cocoa bond, they'll find it difficult to raise money because the understanding of the financial system is not appreciable now, and as a result of that, it is expected that whatever is happening in the bond market would definitely affect cocoa markets because the investor community does not really understand what the cocoa bills stands for. And over the years, clearly, government has been raising cocoa bills at even higher coupon than has been raising bonds at higher coupons than the cocoa bills, which gives you certain levels of assurance that people have in the cocoa bills. But it looks like, this time that assurance has waned or completely gone down. And all these are things that should signal you that we are gradually getting to a point where the trust in the financial system is going down completely. Because if you have anything to complain of, the least one should be of the cocoa bills, which usually the coupon payments are contingent on the cocoa inflows. And as far as the cocoa will have the market, obviously we shouldn't have problem with paying, cocoa bond coupons when they mature.
I was trying to find out how significant this directive from the Bank of Ghana will be to cocoa, to use the cocoa proceeds, basically, or deposits to pay retail customers. How significant is that?
Yeah, it is significant because, we should understand that some of the banks can take on unnecessary risk by subscribing bonds that are more than the deposit of cocoa board that are with them. So when it turns up like that, then we may have to, the banks may have to sacrifice more beyond, those subscriptions. So it depends on the type of bank. And I know, these are the government or rented banks. And we're talking about, I don't want to mention names. I'm looking at banks that have, a strong representative of government on them. So effectively, yes, there's going to be impact in there as far as the bank's liquidity is concerned.
Now, there are fears that this development is likely to hamper our future cocoa syndication loan and, of course, floating of bonds, cocoa bonds. How true is that? And if it is, what can we do to manage that?
Yes, cocoa bills is more or less a quasi, kind of government bond, because whatever the case may be, the control of cocoa board itself is government oriented, the board composition and everything. So if you understand the investment space very well, whatever is happening, there is a tendency that government may even divert funds that are related to cocoa bills to other obligations. So if you're an investor and you're looking at this holistically, then it should affect your decision in investing in, cocoa board. But if it is managed very well, to some extent, if assurance is given that cocoa bills, the coupons are tied to cocoa proceeds, we shouldn't have this problem. Other than that, the investor community will still be in a dilemma as to what the cocoa bills stands for.
How do you foresee things playing out in the cocoa industry following this development?
Yeah, obviously, the cocoa cratchit or the cocoa, what do you call it? The cocoa cratchit is sitting somewhere in the village. We'll be expecting his funds. And once there's a delay, and looking at what is happening in the financial space, they will tie it to, the likelihood of government not being able to pay, cocoa business, operators and all those. So if we don't take care, people will start diverting their attentions to other commodities. And I know there are competing commodities in the agriculture space, looking at coffee and all those that people these cocoa farmers can jump on. So we have to be careful and manage the situation well. We know cocoa is one of the spines as far as this economy is concerned.
Now, in a related development, the Bank of Ghana has disclosed that it has reached an agreement with commercial banks for individual bondholders of cocoa bills to be paid on maturing papers this week. Your thoughts?
Yeah, I think we need to look at it carefully. And if cocoa bills are purely institutional investment type of bills, then by extension, some of these banks were playing kind of illegality to raise money to come and buy the bonds. And I'm looking at what the Bank of Ghana will do to them. We know that if you fought in the space, obviously you need to be penalized. So we need to be careful and get this things in the right direction.
Professor Lord Mensah, grateful joining us on the marketplace with your perspective on the subject matter. We are indeed grateful. Welcome back. This is the marketplace with me, Pious Kojo Backah, and we will go back to our earlier story where banks have reached an agreement with the Bank of Ghana by way of improving or shoring up our 0% interest on coupon payment. Dr. Amwa is back on the telephone lines for more. Grateful, Doc, you could join us on the marketplace. Earlier I was asking, what will this mean to the banking industry and insurance sector as well?
Yeah, thank you very much. What it means is that we have some level of respite in the sense that expected revenue, which in the initial debt estate program was going to be zero, on these government bonds have now been agreed to be 5% this year. So if you look at the revenue generation side of the bank, what it means is that the banks are now going to get 5% on their investment this year, which will then be added to interest income from loans and trickle down into their performance. So it is better than the initial zero coupon that the government presents. And again, we must add that the banks themselves have assessed the situation, they have gone through the discussion, and if the banks are signing an agreement to this, then it means that this particular 5% will go a long way to help the bank's operation in the 23.
I was coming to that, looking at the impact this 5% would have on banks. Do you think it has the potential to, cushion banks?
Absolutely. The 5% is better than nothing in the first place. So, and if you look at the bank income structure, realize that about 45 to 50% of banks in Ghana rake in income from instruments or investment. And in many instances, it is their dealings with government. So clearly, if this year government has changed their position and is giving 5%, it is not the best. But then, given the current circumstances where all the participants are being called to share in the burden, then at least 5% to cushion the banks is enough for this year. What we need to be asking, of course, we cannot answer this question is, what happens to the principal payment? Does it mean that there will be no principal payment this year? Because the principal payment is also another conduit for the banks to get a portion of whatever they invested in some of these bonds, so they can also reposition them into other investments. So if it is only the coupon, what about the principal? That's another question that we need to ask. But the 5% is better than nothing at all for both the banks and the insurance company.
Great. So what can the parties do to quickly complete the debt exchange program in order to move to the next stage of securing an IMF program?
You see, it is sad that for just about 20 years, from 2003 to 2023, just within 20 years that we started borrowing from this international market, we are bankrupt. What has happened to all our resources that God has endowed the country with? That we are at a point where it's as if there's a gun on us, and within February ending, March ending, we must secure a deal. Why are we so much in a hurry and we have no breathing space to do this? Clearly, we need to reassess ourselves again and to move away from what we have been doing in the past. Until all the participants within the debt system program are completely satisfied have not heard of what is going to happen to the individuals. Until all the parties are satisfied, we cannot have a successful debt exchange program that we seek to have by February ending. So yes, the banks have accepted, insurance have accepted. There are other participants within that space. It is based on successful negotiation with these participants that one can say that we are successful and we can then present a case to IMF for consideration. But it appears as if there's a gun on us, and at all costs, by February ending, March ending, we need to get this thing through. That posture, yes, might be important, but then it doesn't give a lot of room for good negotiations to be done. Nobody is saying that give everybody the whole year to come to the table. But at least we should not end up destroying ourselves in our attempt to secure just 3 billion, which will not even come as a goal. It will come in tranches. So let's take our time and let's make sure that all the parties are satisfied.
Indeed, myself, I don't know as to what is informing government to issue that timeline by way of securing that deal with the IMF by February or March, all things being equal. But do you think we have that time to engage the various players in securing the deal?
I would say yes and no. Now that the banks, in fact, the banks and the banks in particular are the most important players there. So now that the banks have somehow have bought into the idea, I think that's a big respite for government. Now we need to talk about the individuals. We need to talk about some other stakeholder interest. As for Bank of Ghana, you don't have to talk much about Bank of Ghana because Bank of Ghana, whatever be the case, Bank of Ghana will accept it simply because you cannot owe yourself. In other words, Bank of Ghana is an agent of government. So whatever Bank of Ghana bought in by this instrument, you can say that there's no urgency to repay Bank of Ghana. So Bank of Ghana is out. What we need to do is that we need to give ourselves time. And then make sure that everybody is satisfied.
And when you say we should give ourselves time, let's look at the duration.
Yes, IMF works with time. It is true. IMF works with time. But IMF also have an interest at stake. So I will not be able to put a time on this and say by so and so time. But you see, we should not end up destroying ourselves in our attempt to get this deal done. It is better we meet everybody halfway and then we go as a group with everybody buying in. It will be difficult, but then at least getting the greater consensus of people down to coerce a group, and we get into the program, and we don't even get 3 billion from the word go. It has to be in tranches. Yeah. So let's still exercise some patience and let's make sure that everybody's satisfied. But that doesn't mean that we have the whole period to ourselves. All right. Let's work within reasonable time. Yeah.
Thank you very much. Dr. Benjamin Amwa is a senior finance lecturer at the University of Ghana Business School, speaking to us there. Now, government treasury bill sale fell short of its target by 20% as uncertainty over the domestic debt exchange program continues. Now, according to auction results, the government mobilized 1.93 billion cedis as against a target of 2.41 billion cedis. There is more in this report.
The undersubscription of the treasury bills is in sharp contrast to the 52% oversubscription recorded the previous week. The 91-day treasury bill was the highly patronized by the investors as 1.58 billion cedis was secured from the sale of the short-term instrument. Despite the maturity period being shorter than the 182-day and 364-day treasury bills, the interest rate of the free financial instruments were virtually unchanged at 35%. The rate on the 182-day and 364-day, however, fell marginally, whilst the one-year bill went up slightly. Finance Minister Ken Ofori-Atta last week, in an exclusive interview with Joy Business, said it will be suicidal if treasury bills is included in the debt exchange program because it is currently the only source of borrowing for government. Despite his pronouncement, the sale of the short-term securities has been mixed in recent times.
All right, so let's dwell on this furthermore. Joining us is analyst Patrick Agama with Republic Securities. Mr. Gama, grateful you could join us. Now, first and foremost, how did the Treasury market fare last week?
Well, for last week, we saw that the 91-day cleared at 35.63%, gaining by 16.99 basis points, although bids that were accepted stretched to 35.97%. The 182-day cleared at 35.81, dropping slightly by 2.66 basis points, whilst the 364-day equally dropped by 35.56 basis points to close at 35.56. In all, the 91-day closed by gathering 81.9% of the total bids against 15.1% and 2.9% for the 182-day and 364-day bills.
All right, so based on the results, what is the outlook like?
Well, it looks like confidence is actually reduced heavily in the market. As these things are happening to cocoa bills and other instruments, investors are not really sure what will be the next. So investors are losing confidence in the instruments issued by government, and this is not really right for the market now. We expect the market to gain confidence. Most markets thrive on confidence. So if the confidence is not much and we are losing volumes every week, then it becomes a problem for the government and for the market.
I guess the domestic debt exchange program has a major role to play in that.
Yes, it's that a greater role. The thing is not just about what is happening. Everyone understands what is happening, but it's about how this is happening. And the poor communication, late communication is affecting the market greatly. And you know now that the finance minister clearly stated, it was just last week that he clearly stated that the treasury bills will not be affected. But the same last week, an instrument that mimics the treasury bill, the cocoa bill, had an incident, and that really affected investors' confidence in the market.
All right, Patrick Edemagama, grateful for your time. He is the head of Trading Republic Securities, speaking to us on the market update there. And that's it for Marketplace for today. I am Pious Kojo Backah. Always a pleasure serving you. For more news, you can log on to myjoyonline.com/business. Do enjoy the rest of our programs.